Texas Instruments reports a solid quarter, and now the earnings focus turns to Apple, reporting after the closing bell. But futures are struggling to regain any momentum following European markets lower after private bondholders and Greece are unable to reach a haircut deal. And in Washington, President Obama prepares for the State of the Union. I'm Alex Steele, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Alex Steele with The Street, and together we bring you Morning Call Express. So, Scott, we had the stocks very choppy on Monday, S&P ending kind of relatively flat here. Should we prepare for another leg lower, or is this sort of opportunistic buying with futures opening lower?
I think we have a lot of traders on edge that this market has been rallying like this, and it's getting a little bit too far in the tooth, they call it, meaning that we're getting a bit extended, a bit overbought, and I think a correction would be welcomed. What I'm looking at is two patterns in the market right now. I'm looking at an uptrend that started on October 4th.
Let's look at the chart while you're explaining.
Okay, so here we go. Look at the chart. Two different uptrends. You have to monitor both. This is the more gradual one. Here's the low. We'll use a spider, so to speak. That happened in October. Then another higher low in November. Another higher low in December. And then we started to get into a new uptrend that accelerated at a faster pace. What I want to do is I want to measure this accelerated uptrend, which I'll even tell you and give you a closer look to see levels here where if we wind up breaking, okay, maybe closing below 130.50, can we get more corrective type action down to this moving average of around 128.67? Then even if we pulled back to this more gradual uptrend, it would still be healthy, but some momentum traders would probably be a little upset at this time.
All right, so then what are you going to do strategically? Are you going to be looking to sell until we break that level and then short, or are you just going to wait till we break that level? What's the game plan?
I've been trying to manage all the positions. I was definitely more long only from that December 20th gap and go. I had about 8 to 15 positions. The last few days, starting last week around Thursday, I pared down some positions. I started putting on a hedge just in case I needed to trade around the positions. And as of yesterday, I was probably the most light long that I've been. Doesn't mean I'm going to start just being, full-fledged short, but I'm a little bit more short the diamonds, long some VIX. I actually shorted, some shields that I'm going to hold a little bit longer. And I've just taken some stocks off or some size down because I do feel like we were prone to some type of mini short-term correction.
So very quickly, what are the stocks you took a size down in their position, and what stocks are you leaving alone?
Well, I added to actually Lulu yesterday. I like the chart. Take a quick look here. Stock looks pretty good. It held the earnings gap, going sideways. To me, this looks like it's in the game to make 52-week highs. I entered a position of X. I haven't had it in a while. I know it's a bottom feeder type trade, but I see a nice tight pattern here. I think if this stock can get above 28.50 or so, it could go a nice distance. We've talked about the OAHs about a week or so. When it crossed above 118, I went to tier 2. It hit 124. I brought it back down to tier 1, but I'm going to stay with it because I like that group overall. Spiders also, I'm in a small tier 1 versus a tier 2. So I really went from like a tier 2, a tier 3 to a tier 1 that I'm committed to, and then I'm also just trading around regular setups along the way for cash flow.
And we're going to be talking about this in more depth in the morning call, but casino stocks, I have some good fundamentals on them headed into earnings. Do you see good setup patterns for these guys like the Las Vegas Sands and the Winds?
I do, and all three of them are a little different. We'll go in more in depth. Yep. I think the long-term chart looks best of LVS. You take a quick look at this, chart here. It just broke this little short-term downtrend. If you look more at the monthly chart, you will see. Look at this tight pattern here. This tight pattern shows a lot of people getting involved. If this thing goes above 49-ish or so, it could finally have a move. Win was a little different. It's been under a little pressure, but it was a good bottom-type trade. We called that out about a week ago. And then MGM has just been like a slow, methodical, put it in the drawer, and it's been acting pretty well.
We're going to have a lot more on those stocks as well in the entire morning call. But wrapping it up very quickly, Scott, having Stephanie Link, portfolio manager for Action Alerts Plus, at the Street yesterday, she was saying that she has a lot of cash right now. So I wonder if we're really going to get that dramatic sell-off or any kind of big dramatic sell-off, because it seems like there's money on the sidelines getting ready to be put to work. Do you agree?
I do think that a lot of people have money and they don't want to buy it yet, so they want to pull in. So it all depends on the size of the retracement. For her, she sold into strength pretty much the same way I tried to sell into strength, so she could be prepared for a day where now we're down 6 handles. Maybe we go down 1% or so. Maybe we have a few days of a correction. So you want to be ready to buy at this point. I don't think you could ever be an all-in this year just based on what could go on in Europe and overseas and whatnot. But if you manage the positions and stay the course and don't fight it, there's going to be a lot of money to be made short and longer term.
All right, so get ready to buy. I guess that's the theme for today. We're going to be back with more on the entire morning call, casinos, gold, and a lot of other stocks.